What did you make of the extent of the beat that we saw from some of these big banks?
I think results were strong. There's no disputing that. Certainly in a historical context, returns are very impressive. But as we know, the market is a discounting mechanism. It's what have you done for me lately? And in that context, returns and then results were very much in line with expectations. As you say, investment banking activity very strong and likely to remain so. Trading activity against a difficult comp from first quarter and, more importantly, the pandemic last year was more challenging. But overall, the results themselves do very little to provide any clarity over the durability of those returns.
Neil, there's all sorts of question marks as you talk about that durability. I mean, we've got more Fed action potentially later this year, whether that brings more market volatility back into the equation, reinforcing the trading income that we witnessed during some of those pandemic trends. Perhaps that's something to watch out for. The other point here is that there are all sorts of concerns around the M&A outlook when we've got the United States going after antitrust cases, China where there's more tech regulation that may be impacting some of the listings. How do you look at the durability of the earnings in a couple of these key areas for the banks?
I think it's very difficult to gauge, and that's what the market is grappling with at this particular juncture. I think M&A activity will remain strong over the second half and into early next year. The factors that you reference have to be brought into consideration, but overall, I think what drives M&A activity is the strength of the economic outlook, as the Goldman CEO referred to in your earlier segment, and that looks fairly robust to us.
Morning, Neil. Look, can we put to bed at long last now the importance of NIMs and higher interest rates as well? Because it seems to me these banks are absolutely making hay, regardless of what's going on with the underlying interest rates as well. There is this mantra that NIMs and higher interest rates go in tandem as well. Well, are these banks proving otherwise?
I think yes and no. I mean, as you say, Steve, very impressive results. Investment banking, wealth management, strong. Certainly in wealth management's case, fairly resilient. And I think there's a good argument to say that in an economic context, NIM is losing some of its importance. Now, unfortunately, markets are driven by as much by psychology as they are fundamentals, and quite often it is perception as opposed to reality that drives share prices. And I still think that if we see a pickup in inflation expectations, a steepening of that yield curve, then the market will adopt a sort of Pavlovian response, and bank share prices will outperform in that environment, even if ultimately NIM is not as important as it has been historically, or certainly NIM may not be as sensitive to a rise in interest rate environment as it has been.